Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you very much for joining me. The Australian dollar has remained relatively weak. After a brief pause above 75 cents, the market took a tumble yesterday, which was mainly triggered from the poor retail sales report. In March, retail sales missed the 0.2 forecast and came in at 0.0, with the previous number in February at 0.6. The Australian dollar dropped to a fresh 11-month low of 74.33 yesterday, as the greenback also gained momentum. It is from this point that the market is extremely oversold, and for those trading from a bear case, bullish divergence is evident. Nevertheless, the market is still persisting to move lower as it now trades at 74.30 this morning. I do believe that the market will turn around, and at this point the market support for the Australian dollar is at 73.75. A rejection from there could see an easy recovery back towards 75.5 to 76 cents, as we've seen this market before snap to the upside late last year and turn into a very relatively bullish uptrend. So just be on your guard if you're trading from a short side, as the market is, as I say, portraying divergence. Overnight, the US dollar actually rallied further and now posts a fresh high of 92.90. Since the break of the neckline at 121.80 in the euro, the target is near enough been reached, with the overnight low for this year of 118.37. At this point, we are oversold, and with the objective nearly reached at 118, I now square my position up. The reason behind this is that we could eventually see a snap to the upside. The ADX is overheating, and the stochastic is relatively oversold and flat. So the next move is 50 points down, should find good support at 118, the figure 20. Resistance on the day comes in at 119.15 to 119.60.70. The dollar yen hasn't made any real significant moves in the last few days, but it's still showing bullish potential though. I feel that any moves at sub 109 is a buy, and we could eventually see a snap to the upside as the market is now gaining momentum. A break above the resistance of 109.70 would give further scope to the upside to 110.55 to 111, which is my view. As I mentioned, any weakness is still a buy under 109 towards a 108 mid. The pound hasn't gone anywhere for the last 4 days and still waits for the Bank of England's decision, which is tomorrow at 9 p.m. Although we did see a fresh low overnight and taking out Friday's low of 134.85 and posted low of 134.83 before rebounding. At this point, I don't have a view because the fact is we're still oversold and we can still see a snap to the upside. So let's see how the market plays for the next 24 to 48 hours and see what the Bank of England reveals. Support at this stage is at 134.80, resistance at 135.80. The gold snapped to the upside after printing a low of 1,305 overnight and rallied up to a high of 17 as safe haven demand helped soften the blow of the recent rally in the greenback. At this present stage, the market is still looking for another test down, and I still wouldn't rule out a fall towards the low region, which is a base at 1,300. But overall, the market is still persistent in buying from that region, and I believe so as well. And we do expect to see a rally up towards the 1,330 mark. Rounding off with oil, where the market stabbed to the lows around 67.5 overnight before rallying back towards $70 a barrel. My view is still bearish on oil, and I still can't get at this point bullish above $70 a barrel to 72. I see this as a sell zone and look back towards $66 a barrel with the uptrend coming in at 64. Well, that wraps up for today. Thank you very much for joining me. And as always, look out for the intraday report, and I hope you enjoy the rest of the day that's ahead.